welcome everybody to the Atomic Eagle Investor webinar, principally to talk about the two recent announcements from yesterday, our resource upgrade, where we had a 24% increase in resources, as well as this morning's announcement where we've declared an ore reserve and essentially re-released the old feasibility study from GoviEx from 12 months ago. And just on that history, so Atomic Eagle is 3 months old. It was a Shell Tombador Orion that acquired a TSX listed company called GoviEx. And so there's a lot of history through GoviEx I'll talk about, but really it's a few months since I've been involved and the company's been attacking this project that we'll be updating on today. But firstly, just a bit of background to the uranium setup at the moment, which no doubt from a fundamental structural point of view and also from a strategic point of view is a fantastic thematic to be involved in. So firstly, from a supply-demand point of view, obviously the supply side of uranium, it's very hard to bring uranium mines on in a quick time frame. Our Zambian project has been going for almost 20 years. And from the demand side, obviously AI and data centers is creating an insatiable level of energy demand that the only constraint really to the growth in nuclear energy, I think, is the build out of nuclear reactors. And that's what's really interesting at the moment. You've got China essentially announcing 10 reactors every year. You've recently had India come into play with Cameco and Kazatomprom. And you've got the US as well with a huge gap between their requirements and what they produce domestically. So strategically, it's a really interesting place to be at the moment. And what we know from the history is that the thin spot volumes in this market mean that the price moves can be quite large when you get into that sort of deficit. So how's Atomic Eagle positioned within that whole setup? Zambia is quite a strategic location. It's geopolitically neutral. It's got a very strong mining history and a stable fiscal regime. So we have the ability to deal with any of those strategics that come our way. The pathway to production, so we're already on mining licenses. We've got a very simple flow sheet and simple technical mine with high recoveries and low acid consumption. And we expect any scale expansions that I'll talk about to today's feasibility study would be low capital intensity and high impact on our economics. But unlike a lot of other uranium companies on the ASX, it's all about growth for us. We've got a 58.8 million pound resource. There's been not a lot of exploration done on this project over the last decade, and that's what we intend to do through 2026 with the largest drill program in 17 years about to commence later this month. So just on that geopolitical piece, so as I mentioned, Zambia is geopolitically neutral, and we think that's going to be of strategic value when you've got near-term pounds that can be brought on by roughly 2030, when you've got a supply shortfall that's coming and numerous countries all pushing in to align themselves and get that strategic supply. So the US are throwing money at a bunch of different projects, and we know what they're committed to in terms of their nuclear capacity. India is pushing for 100 gigawatts by 2047. As I mentioned, two very recent deals with Kazatomprom and Cameco. And China obviously recently won the deal for Bannerman, so CNNC coming into Bannerman as a strategic investor. So I think it's probably leaving Western utilities wondering where they're going to get some of their uranium from, and that's why we're in a fantastic position in Zambia with its strong mining history. It's one of the largest copper producers globally, ranks right up there on the Fraser Institute rankings, and a very, very favourable tax regime. So we're in a great spot to be able to capitalise on this. So just the background on our Muntanga project in Zambia. So there's the upgraded JORC resource, as announced yesterday, increased to 58.8 million pounds at 309 ppm. There was a feasibility study done 12 months ago by GoviEx, and that's been re-released by us this morning. I'll talk a bit more about that, but that's a 12-year heap leach operation that's only using the measured and indicated resources from those two central deposits, Muntanga and Dibwe East. And so there's a lot left on the table there that I think can underpin a higher production throughput and a drastic improvement in economics. From a permitting point of view, whilst we're not going to push this down the development path right now, the resources do sit on mining licenses. So the darker tenements you see on the image there are mining licenses. The environmental and RAP approvals were submitted last year. and we're expecting to receive those in the first half of this year. So we are capable of pushing the project forward, but this has been an absolute change in project strategy from Atomic Eagle. Our intention is to grow the resource, to find out how big it can get, and then use that upgraded resource to vastly improve the production profile. We're trying to build a mega mine scale here, which at any uranium price would be economic. And the opportunity to do that within the Karoo Basin sandstones with over 1,100 square kilometres of tenure is a very strong opportunity. So in the first few months, while this transaction was being done, there was some money put towards GoviEx to undertake a drill program under Atomic Eagle's new management and direction. It was principally focused at Chisabuka and Muntanga East. And for US 5 cents a pound, we've been able to add 11.4 million pounds of resources. So an excellent result with a limited budget and a limited time frame before the wet season came in the end of 2025. You can see with the image on the left there, the 9.7 million pound resource at Chisabuka is only constrained by the drilling density. That was the area that we drilled to 100 by 100 metre spacing required for resource conversion. As you can see from the rest of that map, which is a grade times thickness curve, essentially showing where the best parts of the uranium ore body are, you'll see there's more to come. So when we get to the next field season, first cab off the rank will be to infill drill Chisabuka, and there'll no doubt be some resource growth there. On the right-hand side, you can see Muntanga East. There's little insets if you want to see where these are located relative to the entire tenement package, but the Muntanga East inset you'll see is located only kilometres from those central deposits used in the feasibility study by GoviEx. All the mineralisation here is sub 50 metres, so it's going to be a very low strip addition to our mining inventory, and 1.7 million pounds added there. So as it mentions at the bottom, large portion of Chisabuka remains to be infill drilled. So that's obviously a resource growth opportunity for us moving forward. So just on the resource table, we have highlighted at the bottom there the two additions into inferred resources, Chisabuka and Muntanga East, 24% increase up to 58.8 million pounds. And hopefully that's a good demonstration of the exploration approach, but also the prospectivity of this project as we seek to try to double the resource in the coming 12 to 18 months. So this morning we released a feasibility study, and just to be clear on this study, GoviEx released a study under what's called NI 43-101 standards 12 months ago. We're essentially re-releasing that study. So we haven't done a new study, but from an ASX compliance point of view, you need to get an independent engineer to sign off that the inputs were reasonable. And we had a group called Prodeo undertake that review. We also had Uquasi who signed off on the original. It's called a mineral reserve on NI 43-101. On ASX, it's called an ore reserve. So we've essentially just declared the ore reserve that had been disclosed by GoviEx before. What the feasibility study from 12 months ago highlighted, though, is from a technical standpoint, this project's very simple. It's low strip open pit mining. It's heap leaching with very high recoveries, over 90%, averaging over the life of mine, and very low acid consumption at 20 kilograms per tonne treated. So acid consumption is a large portion of OPEX for these sorts of projects. So what this has given us is a very sound technical baseline. We're not saying that we're going to go and build a project with 2.2 million pound per annum production profile, but an NI 43-101 feasibility study is the same level of technical detail as what's called a definitive feasibility study here on the ASX. So what we can bank on is that the work's been done to a high standard, gives us a fantastic baseline to move on from here. Where we see the opportunities, and there are a lot of opportunities and optimizations, even if we were going to build this project tomorrow, we think we could enhance this study. But where we see the real value add is in improving the production scale. So these heap leach operations, if you can increase scale, there's very low capital additions to be able to achieve that. So it's all straight onto the top line, onto the economics. I'll show you on the next slide. Even if we didn't find any more uranium this year, we've got a substantial ready-made opportunity to add additional feed to be able to grow beyond that 2.2 million pounds per annum. What this image shows here, highlighted in the dark blue, Dibwe East and Muntanga measured and indicated resources were the only resources that fed into that feasibility study 12 months ago. The measured and indicated resources from Dibwe East and Muntanga, adding up to 6 million pounds in the middle there, they weren't included because of NI 43-101 regulations. So they were actually still mined, but treated as waste. So that's an immediate opportunity. The satellite deposits, there's 3 satellite deposits that were in existence at the time of this study. Work was done that demonstrated that they were cash flow positive and NPV positive, but were excluded because GoviEx said that they wanted to put forward a simplified development option. We can't see any reason why you wouldn't include those satellites in future mine plans, and again, another opportunity. And obviously on the right-hand side there, the recent resource upgrade wouldn't have been known to GoviEx. So this is just the beginning of hopefully a very large increase in the resources to be able to convert them into reserves. Obviously there's infill drilling and technical studies, met test work and the like. But if it performs anything like the rest of the project does, we expect them to be high recoveries and fold into the economics quite well. So where's the growth going to come from beyond here? Later this month, we'll be announcing the commencement of the largest drilling program in 17 years of this project. Very limited drilling has been done on this project over the last decade. So it's a huge opportunity for us. Within what we know is a known uranium belt. The Karoo sandstones host over 500 million pounds of uranium resources, starting at Makuja River in Tanzania and heading all the way down to South Africa. Late last year, we released an exploration target of 40 to 100 million pounds. Chisabuka was included within that, but these are ranges. So we've still got a number of undrilled targets to come. And as I mentioned, still a lot of growth to come from Chisabuka. The key targets for this upcoming year will be Namakande 1 and 2 down in the southwest, and also Muntanga North up in the northeast. These aren't greenfield targets by any stretch. We've got the same geophysical and geochemical signatures that we've seen at Chisabuka and other deposits across the property that lend us to believe that there is uranium mineralisation. We will be going out with a couple of rigs, and just like our recent program, it'll be very cheap, shallow drilling. And we'll know probably by the middle of this year what a lot of these targets are coming through with. So it's going to be a really exciting time for the company. Within Muntanga North, you've got 8 discrete targets within that entire 80 square kilometre area. So we're talking pretty big regions of potential mineralisation. And Namakande 1 and 2 are both very large targets themselves. So as I mentioned, there'll be an announcement later this month providing a bit more detail about that and the kickoff of that program. Just from a peer comparison point of view, and sort of stepping back more to the company now, beyond the or after the release of these resources, we are incredibly undervalued relative to other advanced developing African peers on an EV to resource pound basis. We think the way to address this is to continue to add the pounds, and as I mentioned, we do have a very strong technical baseline to know that it is a developable project. We know from the other resources that we already have that weren't included in the studies that they could go into an improvement in the project economics by an improvement in or an increase in the scale of the project. So, but adding more pounds is how we'll get there. We aren't just sitting sort of fit ready. We'll have growth from that. But where we also potentially expect to have growth, this is just an image of the global undeveloped uranium projects. We have excluded NextGen, which would sit right out on the right-hand side of this image. And we've also excluded a global atomic starter project, which has already started some works. But you can see where Muntanga is there. But the Matawala project is a project that GoviEx had ownership of. They spent $170 million on acquisition, exploration and studies, and it was expropriated by the Niger government in 2024. GoviEx commenced international arbitration proceedings and made a claim with ICSID. But for the last 12 months, there's been a pause on those arbitration proceedings while the company negotiates to seek to get that project back on fiscal terms that make sense for Western financiers. I met with the minister in Saudi Arabia in January. And our advisors also met with the team, entire ministry team, in Niger a couple of weeks ago. And we are working very hard to try to get that asset back. And there's no doubt fantastic option value on the upside for us with that asset. Having said that, we think Muntanga in Zambia presents a fantastic development opportunity into a quite a strategic market at the moment. So why invest in Atomic Eagle? I think the feasibility study gives us a very sound technical baseline. I mentioned that the optimizations and improving the scale are no doubt going to improve the economics, and we feel that we already have enough to do that. But we aren't going to go down the study route until we have found the centre of gravity of resources and how big it could be. We think the recent resource increase is a good demonstration of the exploration potential in the region. Obviously, uranium is a fantastic thematic at the moment, and not just from a supply demand and what that means for pricing, but with strategics starting to step in, and not just strategics, we're talking about large sovereign governments and the things like that. That's usually a precursor to there being a lot of exciting activity in any sector. We're fully funded, 19 million in the bank end of December. There's no way we can spend that this year on exploration and the studies we've got planned. So certainly not coming to market. And that Niger asset gives us a nice little option value if we can get that back as well. So yeah, thanks everybody for joining the webinar this morning, and I'll open it up to questions.
Thanks, Phil. Just a reminder, if you would like to ask a question, please enter it into the Q&A panel within Zoom. We've had a few come through, so we'll just work through these. The first one's regarding yesterday's announcement regarding the mineral resource estimate. Was the 24% increase in line with your expectations?
I think internally, and it's exploration at the end of the day, so until you've seen these things within pit constraints and stuff like that, you don't really know. I think we thought 20% increase would be a good result. So to get 24%, I would say overshot our expectations, especially for the time frame that we've had to direct that drilling and the budget that we allocated. So great result, but as I said in the presentation, I think that bodes well for I think the prospectivity and the ability to add more pounds this year.
Thank you. How were you able to complete the drilling, completed as the cost of 5 cents a pound for the MRE?
Yeah, I might have just brushed over that in the presentation, but the type of drilling, and it's relatively new to me, the type of drilling used for these uranium deposits when you're in the exploration phase is known as percussion drilling. It's essentially like a water bore rig that drills the hole. Sorry, my light always seems to go off when I'm in the middle of a presentation. Drills the hole. You use a gamma probe to take a gamma reading, and as long as it's been properly calibrated, you can then estimate the uranium content there. Once you've defined a resource, you can then send in diamond rigs to drill holes to verify those sorts of things. So those percussion rigs are about direct drilling costs $40 a meter. And they're very shallow holes, so not only is it cheap, it's also very quick to get coverage of quite vast amounts of terrain. So yeah, I'd say it's the method, but we've also got a contractor that we're very happy with in country.
Okay, thank you. Can you tell us more about the drilling plan to commence soon, and what will the focus be?
Yeah, so infilling Chisabuka will be first cab off the rank. That'll take about a month. Namakande 1 and 2, the rig that's at Chisabuka will go there afterwards. But there'll be another rig up at Muntanga North, probably for the whole field season. Prior to the rigs spinning, we'll also have ground geophysics just to hone in on the best parts of some of those targets. And then draw them on a 400 by 400 spacing. So you're not going to miss anything big on those sorts of spacings. The feedback you get from the gamma probe is instantaneous. So the ability to follow up on positive results or move on from results that aren't as positive means that you can make the most of your drill meters. And so I think it'll be roughly 30 to 35,000 meters that would be concluded by early in Q3 that would have tested the majority of those targets on the 400 by 400 spacing. And I would expect if we're getting positive results, perhaps we're sending another rig or two in to infill drill, because we want to get as much of these targets into resources by the end of the calendar year.
When do you expect to provide further MRE updates for the project?
Yeah, I think it'll be results dependent, but unless there was some material deposit that we uncovered and infill drilled by the middle of the year, I would expect that it would be by the end of the year, end of the calendar year. That's not to say that there's not going to be a lot of news flow coming out of that. I think it'll just be a steady stream of drill results throughout the year, as well as undertaking any met test work on any new discoveries that we're making as well, just to confirm that the recoveries and acid consumption are all in line with the rest of the project.
Thank you. And how long does it usually take to get back the core analysis from the lab?
Well, yeah, as I mentioned, the beauty of the percussion drilling and the gamma is that's instantaneous. So you know that straight away. But towards the end, to ensure you can get the resource, you send the diamond rig in there. They're usually a couple of months sample prep in country, getting it off to Joburg for assays. So because of the percussion drilling and the gamma, there's far less waiting around for results in this sort of project.
Thank you. There's been a couple of questions regarding the cash balance of 19 million.
Yeah.
To summarise, how much runway do you expect this to provide?
Yeah, look, I think the current budget would see us with slightly less than half of that by the end of the calendar year, doing everything that I just described. So I think the prospectus set out a 2-year runway, and obviously, if you're having success, you're going to allocate more funding to advancing the projects as quickly as possible. But we've absolutely got that runway. Investors need not be concerned that the company's coming to market.
Thank you. There are no further questions at this time, so I'll now hand back to Phil for closing remarks.
Yeah, thanks, Nathan. Look, I think we've said it all. Unfortunately, the market over the last 24, 48 hours has not been a fantastic market, and but we don't need to raise money, as I said. So we'll stick to what we can control, which is the resource growth, continuing to de-risk the project and look at those optimizations. And in the commodity we're in, I think it is not war-proof, but the insatiable demand for energy is not going anywhere, and a lot of it is driven by what's actually driving the war as well, deglobalization. You've got Americans wanting to onshore all their supply chains and not be reliant on Chinese or Russians or whatever. So these sorts of things mean that every country needs energy security as part of their national security, and it's great that nuclear is being seen as one of the key drivers of that moving forward, which bodes well for Atomic Eagle, as I said, being a project that's demonstrated it can be economic and can also be online in a reasonable time frame. So thank any current shareholders for their support. Open to any questions going forward. Reach out to the company if you're new to the story and you want to hear more. We're always open to having a chat.